Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Monday, August 21st, 2023. Before I click through all the charts, just want to encourage you, as usual, to please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel, as well as sharing content with friends and colleagues. Also, check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Apple report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves on those stocks at the very least. And we offer a 5-day free trial up front. So if you sign up for wickedstocks.com, you get to check everything out for 5 days. And if you don't like what you see, you can bow out at no cost to you whatsoever. So check out wickedstocks.com. On with the charts. Start with the big picture, work our way into the day itself. And the big picture, still several months ago, I'm not going to count the bars and I don't have the date in front of me, but I'm going to say about 3 months ago, we had a long-term buy signal when the market closed the week above this significant channel top at 168.67 on the weekly chart. It is considered an objective, has for the last, well, I can jump to that actually right now. Has for the last week and a half or so when we settled below this meaningful channel bottom that today is at 181.83. So we're still anticipating the 168.67 area. But, a couple of things about that. For one, yes, we still have a long-term buy signal above 168.67. Still anticipating over the months ahead, quarters ahead, Q1, Q2 of next year, this 225.23 long-term rising channel top. So I'm expecting the market to bottom out here, possibly consolidate for a while before turning back up again. And by that point in time, we could be in 240s or 250s as this long-term objective continues to rise away from the market. So the sell signal that occurred a couple of weeks ago below 181.83 is considered a bit of a counter trend signal, a counter trend sell-off. Near-term weakness, essentially, in the face of what is considered to be a longer-term bull market, if you will, longer-term buy signal. So we may fail to reach this area entirely. We dropped to 171.96. That was the low last Friday. I'm not sure if that's all we can expect to the downside, but the market's still susceptible to this week anyway, testing that 168.67 level, holding below, I'll just point to it right here, this channel top at 177.08. So 177.08 can contain session strength. And once tested, we can fall to the 168.67 area within a matter of 3 to 5 days. I don't have them both on this chart. I suppose I could, but the upper 60s are right here. And so, that's kind of right where the cursor is. And so you can imagine that testing 177.08, within 2 to 3 days of doing so, we can fall to the 168.67 area. 169.94 is a 3/8 downside Fibonacci, the January low against the more recent July high. So there's a lot going on there. You can see in the lower right, annual and multi-week containment, able to contain selling through the rest of the year, and above which, anticipating a much higher trade as we move into next year. So for the day itself, I'm going to show you I've got a 30-minute bar chart. That 173.35 level is an intraday pivot point. And, you've seen me use highs of lows, lows of high. It still even works on a 30-minute bar chart. So the high of the low on the 30-minute chart in that opening half hour on last Friday is 173.35. And you can see how it acted as a pretty decent pivot point even afterward. Closing above it, it held to the downside. The market continued higher. So I'm showing that as an intraday pivot point, holding below 177.08. Once again, this descending channel top will keep 173.35 in reach. Now we're showing 174.30. I've eliminated that as a minor point even for the day. I've carefully chosen 176.55, 75.10, and 73.90 for you aggressive day traders, meaning you're scalping 1 to 2 point moves throughout the day in Apple. All these minor points are legitimate, carefully chosen. If we break 173.35, once again, this level, not only anticipating the low area from last Friday, which was what was it? Where it's not there. Here it is. 171.96. I don't even show that as a minor point. I do think that if we break 173.35, we can within the day actually reach the objective at 168.67 to 169.94. You can see that lower right, where once again we can bottom out through the rest of the year. I'll just mention right now that if we close below 168.67 today, it doesn't look good, but I really need to see how the market settles the week out with respect to this, and we'll nuance this throughout the week if it occurs Monday. If we close Monday below 168.67, I don't expect that, but we would be in the early stages of our next sell signal down into the mid 150s, I'll call it. This 153.12 longer term speed line rising gradually would become our next 2 to 3 week target, where we could also bottom out perhaps through the rest of the year. It looks pretty ugly below 153.12, I'll tell you that right now, but I'm not going to go there because I don't think it's likely. But what I am providing here is a 2 to 3 to 5 week target. 153.12 and rising gradually if we were to close below 168.67. Until then, that is our base of support through the rest of the year. Let's talk upside today. That yes, holding above 173.35 will keep the 177.08 descending channel top in reach today, where we can place a daily high. And if we close today above 177.08, the 181.83 formation is anticipated within a matter of 1 to 3 days with this kind of volatility. It could take into later week, depending on the volatility, of course. But closing above 177.08, I'll go out on a limb and say we've got a good low for the week, the 181.83 level, then expected within a matter of 1 to 3 days, could be a little longer, where we could top out once again for the week itself, and once tested, fall back to the upper 160s within 2 to 3 weeks of doing so. So this is still kind of a 2 to 3 week play. A 1 to 2 week play, perhaps. 180, 183 able to contain buying through next week, and from here we can fall off again into the upper 160s within a couple of weeks of doing so. I do see that a settlement above 180, 183 is being a good August low, a stabilizer certainly, and that we should then continue up to 189.06 within a matter of a full week or so, closing above 181.83. So this image kind of paints a pretty good picture through the rest of August. Good pullback resistance at 180, 183. This is an area to sell if you're a 2 to 3 week swing trader, because from here we can fall back to 168.67. Inversely, if we fall to 168.67, it is an opportunity to go long Apple, not only for the day, not only for 3 to 5 days, 2 to 3 weeks, but even through the rest of the year, 2 to 3 months. And so if we're test 168.67, you could, if you're an options trader, for instance, I don't know, this area is all converging by September 1st in the mid 180s. So if we test 168.67, you may consider buying 185 out of the money calls that don't expire. I would go a couple of months out on this. It's only going to take 2 to 3 weeks, but you don't want to go a month out and see all your premium decay to almost nothing by the time you reach your strike. You want to go out a little further in time so you can preserve that delta, the rate of change of the underlying option in relation to the stock price itself. So you want to go out a little further in time. I'm just talking to the options traders. And this would be the big buy signal, I think, through the rest of the year. If we were to close, well, let me back up a little bit. Through September. If we were to close above 189.06, and I'm way ahead of myself, but I'm painting kind of the big picture here, then we have a meaningful signal of strength through September. Let's put it that way. Closing above 189.06, I'm going to call this a 3 to 5 week objective into the low 200 area and rising. These are all new channel structures. Most notably is off that January low against Friday's low, against the intermediate high from July. That's the higher one at 205.26. So closing above 189.06 is sort of our indication that, yes, I think we have a good low for the year, and that within the following 3 to 5 weeks, we should rally to 205.26 and climbing, where we can certainly top out on a monthly basis and fall off again. So that is pretty much it. Now, yes, I have 179.91. I might as well mention that. That is a descending 1/3 speed line. You could call it trend defining, but I'm not comfortable playing the long side of this market as we move into September unless we can get a settlement back above 181.83. And I think you can, if you're short this market, anticipating 168.67. Let me cover that because I know some of you still are. If we close above 177.08, that is your first sign for at least a good weekly low. And if your time horizon is 1 to 2 weeks and we close above 177.08, you may consider bailing on a short position. Maybe you bought those 169 out of the money puts a week or two ago. And if you're still hanging on to them, you may consider bailing with a settlement above 177.08. But holding below 177.08, I do think that this upper 160s remains in play still this week. Closing above 177.08, I think we've got a good low for the week. And over the following, say, 2 to 3 days, 3 to 5 days, we test 181.03, where you can attempt another short play again. When we're testing 181.83, you could then once again reach for the same 169 out of the money calls that don't expire for at least a month. It's only going to take 2 or 3 weeks. I might go a couple of months out on this once again. And finally, closing above 181.83, despite everything I even said about this descending speed line, I do think closing above this is our early indication that this move is exhausted and that we should stabilize. Then it's a matter of time, really, before we close above 189.06 and we continue higher into September trade. I hope that all made sense. I'm going to leave it at that. I'm at 11 minutes and running, but there was a lot to say today. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple Report. You have a great day.